Hi, I'm Jeff Fouts, a tax attorney located in Metro Atlanta with a nationwide law practice helping clients who have serious IRS problems. I'd like to share with you another client case study from the thousands of tax clients we've represented. A man in his 50s from near Columbus, Georgia, called our office for assistance in preventing the IRS from filing a tax lien against him personally. His company owes the IRS unpaid payroll taxes, and an IRS revenue officer contacted him in an attempt to collect the taxes. Our first step was to obtain signed IRS Form 2848 and Form 8821 power of attorney documents from our client. These documents allow employees of the Internal Revenue Service to speak with us and give us information we request from them. We requested that the IRS send us their accountant transcripts, and after we had received them and reviewed them, they revealed that our client did not owe any personal taxes, but his business owed more than $200,000 in unpaid payroll taxes for various periods over the last 2 years. The IRS had filed tax liens and had the legal right to levy or garnish to collect on some, but not all, of this tax debt. Our client had met with the assigned IRS revenue officer and gave him preliminary financial information on the business. Apparently, the revenue officer scheduled what's called a responsible party interview with our client to interview the people within the business who were responsible parties, meaning they were responsible for making sure that the payroll tax had been paid. However, the revenue officer failed to appear for the scheduled interview and had not returned any phone calls to our client asking for an explanation. The IRS must conduct an interview with any person it thinks may be a responsible party. The IRS conducts this interview before they assess any trust fund tax penalties for the taxes withheld from an employee's paycheck for federal income, Social Security, and Medicare taxes against that individual. So they have to kind of ask questions and make sure this person ought to be declared responsible. After conducting this interview, the IRS may request additional information such as copies of bank signature cards and a list of corporate officers or other information. Once the IRS has determined who they believe should be a responsible party, the IRS will issue a proposed assessment giving the taxpayer 60 days to file a written protest to that assessment. So in other words, if you say, oh, I'm not a responsible party, well then you have time to file a protest. So until this response period expires, the IRS cannot assess the trust fund tax penalty against an individual taxpayer. And because there's not yet an assessment of the tax, therefore there isn't a tax debt yet owed by that individual, and thus the IRS cannot take any collection action against that individual, such as levying or garnishing or filing a tax lien against that person. So our client has not yet been interviewed to determine if he is a responsible party for this company's unpaid payroll taxes. Therefore, the IRS has not assessed any taxes against him personally, and therefore they can't begin any collection action against him, including the filing of tax liens. So he was pretty happy to find that out, to at least know where the case was, what step it was, what the progress was, and what to expect going forward. But we are concerned about the lack of response from the revenue officer, and this is highly unusual unless the revenue officer is out on medical or family leave. So we as a firm continue to try to reach the revenue officer to determine how we can move this case forward. I mean, we know how we want the case to move forward, but we need to discuss this with the revenue officer. But he's not yet returned our phone calls either. In the meantime, we're monitoring the business to be sure that all payroll taxes are being paid promptly and in full by the due dates of each of those. We have also recommended that the business begin making voluntary tax payments whenever the funds are available toward the trust fund portion of the tax debt. And so that's a strategy that we sometimes use. I don't need to go into it in depth right now, but this strategy will lower the amount of unpaid trust fund taxes that can be assessed against our client in the future. So what's the moral of this story? It's bad enough when the IRS contacts you, but it is dangerous if the IRS stops returning your phone calls. While a sudden disappearance of an IRS person may be caused by something unexpected, it's highly unusual and it should be monitored by a tax professional. I hope this important client case study has helped you understand the IRS a little better and how tax problems are solved. Chances are you have questions or concerns about your own particular tax problem. I encourage you to pick up the phone and call me. I can answer your questions. Over the past 20 years, I've represented clients in all 50 states and 29 foreign countries, and I welcome your call. You can reach me at the toll-free number on this toll-free number on this video, or by email at jfouts@taxhelpattorney.com. I'm Jeff Fouts, and thanks so much for watching. Have a great day.